The market never writes its truths in ink. It doesn't hand out instructions, nor does it hang signposts for the unwary to follow. It speaks in movement, in the faintest shivers of price, in the sudden surges of volume, in the pauses that stretch out like silence before a storm. Most men cannot hear it. They stand in front of the ticker tape as if it were a wall of meaningless numbers. And to them it may as well be. They want certainty. They want someone to tell them what will happen next. But the market does not indulge. The market only offers its coded language, and the rare few who learn to read it can hear the message hidden beneath the noise to understand this code. One must first accept that the tape is the purest form of truth the market offers. A newspaper can lie, an analyst can be wrong, a broker can spin stories, but the tape, those simple records of trades, has no motive, no agenda. It is a mirror of reality. When a stock ticks higher on heavy buying, it is not an opinion. It is a fact. When it drifts lower despite the optimism of the crowd, that too is a fact. The tape does not whisper gossip in corridors. It shouts the truth in numbers. Yet truth in the market is never simple, never straightforward. A rise may be strength, or it may be distribution in disguise. A drop may be weakness, or it may be clever accumulation. The code lies in the ability to distinguish one from the other. This is why the tape appears as confusion to most. Imagine a man looking at a foreign language for the first time. The letters are there, the words are on the page, but they do not make sense without training. Without immersion, it is gibberish. But once you begin to study, you notice patterns, you recognize repetitions, you find structure in what looked like chaos. The market is exactly the same. Those who dismiss the tape as noise reveal only that they cannot yet hear its rhythm. Those who invest the hours, the months, the years begin to recognize that every tick, every stall, every surge carries meaning. Nothing happens without a reason. The tape records it all patiently, coldly, without bias. The code is subtle. It is never written in bold strokes. It reveals itself in the hesitation of a rally, the sudden burst of selling into strength, the way volume shrinks at the very moment a stock should be strong. These are not accidents. They are fingerprints left behind by the great operators, by the professionals who move quietly before the crowd catches wind. The ordinary trader sees only that the stock went up or down. The reader of the tape sees why it moved, and whether that movement carries conviction or deceit. That difference is the whole of speculation. The tape is not simply a record of prices. It is a battlefield log. Each tick a soldier advancing or retreating. Each surge in volume the roar of artillery. To read it is to see the battle unfold before your eyes while others stand blind. On the sidelines, the crowd craves shortcuts. They search for tips. They beg for forecasts. They cling to the words of supposed experts. But the market's code cannot be given by another man. It must be earned. It requires the discipline to sit in front of the tape, day after day, watching, recording, testing, failing, and then watching again. Over time, you begin to recognize that the tape has moods just like a living thing. It grows eager, it grows nervous, it grows silent, it grows frantic. Each mood leaves a mark in the way prices behave and the way volume flows. Learn the moods, and you begin to hear the voice. There are moments when the market screams its intentions so loudly that even the dullest ears can hear. A collapse on enormous volume, a rally that lifts everything in sight. These are obvious. But the true art of reading the code lies in the quieter moments. When a stock is being absorbed by strong hands, it will not announce itself with fireworks. It will edge higher, pause, edge higher again, with volume that looks ordinary but carries a persistence that cannot be faked. The casual trader sees nothing unusual. The trained eye sees quiet accumulation, the hidden hand preparing for a larger move. Likewise, when the strong are distributing to the weak, they do not crash the market overnight. They let it climb slowly, feeding out their shares into every eager buyer, until the buyers are exhausted and the inevitable decline begins. These are the subtleties of the code, and they are only visible to those who look long enough. It must be understood that the tape is not a mechanical thing. It is human nature in numbers. Every tick is a decision made by fear, greed, hope, or despair. When prices rise too quickly, it is greed forcing men to buy. When they plunge too sharply, it is fear driving them to sell. The code is not mathematics alone. It is psychology laid bare. The market speaks in numbers, but behind those numbers are people, and people do not change. Their emotions repeat across decades and centuries, and so the tape repeats its messages for those willing to study. What happened yesterday will happen tomorrow because human nature is the same as it was 100 years ago and will be the same 100 years from now. There is danger in overcomplication. Many will attempt to overlay formulas, to drown themselves in indicators, to construct elaborate theories. But the pure code of the market remains in the tape itself: price and volume, supply and demand, strength and weakness. To clutter the mind with too many tools is to lose the clarity of the message. The tape is simple, but it is not easy. Simplicity hides depth. The task is not to make it more complex, but to train oneself to see what is already there. The market never hides its truth completely. It only requires the patience and discipline to recognize it. Think of the tape as a book that is never finished, a story being written in real time. Every trade adds a sentence. Every surge adds a chapter. Every climax becomes a turning point. Those who flip through it casually will never grasp the plot. Those who study each line, each paragraph, begin to anticipate what comes next. The crowd will always be surprised by the twist ending, but the reader of the tape will have seen the foreshadowing long before. That is the difference between those who gamble and those who speculate. To gamble is to play blind against fate. To speculate is to listen to the market's hidden code and act when it speaks clearly. When you first begin, the tape feels like noise. The prices rise and fall with no sense. The volume swells and fades without pattern. But stay with it. In time, you will notice the pauses before big moves, the exhaustion after long advances, the strength in a stock that refuses to decline, despite the market around it falling. These are the words of the code. They are always there, waiting to be read. The difference between success and failure in speculation lies in whether you can hear them or not. Price is not merely a number flashing across a ticker. It is the pulse of the market, the heartbeat of speculation. Every rise, every fall, every hesitation is a beat in that rhythm. Just as a physician lays a hand upon the wrist to judge the health of a patient, the trader lays his eyes upon the tape to feel the health of the market. The patient may smile, the patient may lie about his pain, but the pulse does not lie. In the same way, analysts, journalists, and brokers may weave their stories, but the price reveals the truth beneath. To ignore the pulse is to trade in the dark. To understand it is to hold the only compass that can guide you through the storm when a stock advances. The crowd sees only the ascent. They feel excitement. They rush to join. They assume strength is permanent, but the pulse is not simply the direction. It is the speed, the force, the conviction behind each tick. A sudden leap on strong volume is not the same as a sluggish climb on thin demand. The first may show genuine power. The second may only be the last gasp of hope before exhaustion sets in. To see price as a pulse is to measure not only the movement, but the life behind it. The wise operator studies how the price breathes, how it surges, how it pauses, how it recoils. Each of these motions tells the story of buyers and sellers locked in struggle. Every market day is a contest between supply and demand. Price is the truest referee. When demand overwhelms supply, the price must rise. When supply crushes demand, the price must fall. This is not opinion. It is law. Yet within this law lies a subtler language. Sometimes demand is strong but unwilling to show its full hand, so it lifts the price gently, steadily, with the patience of one who is gathering. Sometimes supply is heavy but quiet, releasing shares only when the crowd is most eager to buy, keeping the price firm while quietly unloading. The surface may look calm, but beneath it, forces are at work. Only by studying the pulse can one feel these hidden pressures. The crowd, blind to this, always discovers the truth too late, when the real movement has already passed. Consider the hesitation of a stock that should be strong but isn't. The news is good, the market is favorable, the chatter is bullish, yet the price refuses to advance with vigor. That hesitation is a faint but telling beat in the pulse. It suggests that the strength is not genuine, that supply is pressing quietly, that insiders may be selling while the public is buying. Likewise, when a stock refuses to drop in the face of bad news, when every excuse for decline is present, yet the price holds steady or edges higher, that too is the pulse whispering. It is not what the crowd says, but what the price does. That matters. The tape records what men do with their money, and money speaks more loudly than words ever can. The pulse has rhythms that repeat across all markets and all times. After a long advance, the price often grows erratic, swinging wildly up and down as exhaustion sets in. This is the heart of the market laboring under strain, beating irregularly before a collapse. After a steep decline, the price may grow sluggish, dull, seemingly lifeless, as though the market has no energy left. This too is a rhythm. The quiet after the storm, a pause before accumulation begins again. Those who study price learn to recognize these recurring pulses. The way the market moves from vigor to weakness, from frenzy to exhaustion, from despair back to life. The pattern is as old as human nature itself, because price is nothing more than human behavior written in numbers. Volume gives context, but it is the price itself that is the ultimate judge. Imagine two patients, one with a steady, strong pulse, another with a weak, faltering one. The difference is plain, and it requires no outside commentary. In the same way, a stock making new highs with firm, persistent price action shows strength that cannot be denied. While one drifting aimlessly betrays its lack of vitality, many try to argue with price, to insist that a stock should rise because the business is sound, or that it should fall because the news is poor. But the pulse pays no attention to opinion. It reflects only the reality of supply and demand. A trader who argues with price is like a doctor who argues with the patient's pulse. The body will not change because the doctor wishes it, so the pulse is also deceptive to the untrained eye. There are times when it quickens suddenly, as if in excitement, only to falter just as quickly. These are false rallies, engineered or temporary, meant to lure the unwary. A novice sees strength where there is none, just as a novice physician might mistake a flutter for true vitality. The trained operator, however, recognizes the difference. He measures the consistency of the pulse, not just its momentary bursts. A rally that cannot sustain itself is weakness disguised. A decline that fails to push further is strength in hiding. These nuances are not written in any manual. They are learned only through long hours of watching, waiting, comparing. Today's pulse to the memory of 100 yesterdays, what makes the study of price both challenging and rewarding is its immediacy. News can be delayed, opinions can be distorted, but price reflects action in real time. Every trade executed, every buyer matched with a seller, is recorded instantly. The pulse cannot be faked for long. Men may attempt to manipulate, to paint the tape, to deceive, but the underlying forces of supply and demand will always show themselves. The pulse may flutter unnaturally for a moment, but it always returns to its true rhythm. The skill lies in distinguishing between the artificial and the genuine. Between the temporary disturbance and the lasting trend. Price also teaches discipline. The pulse will tempt you to act too soon, to believe that every quickening means a lasting move. But just as a physician waits to confirm the rhythm before making a judgment, the trader must wait for price to prove itself. One tick is not a trend, one surge is not conviction. It is the repetition, the persistence, that reveals the truth. Impatience blinds men to this. They see what they want to see, and they act on it. The disciplined operator waits until the pulse shows a clear and undeniable rhythm. That patience is what separates the successful from the failures, the professionals from the gamblers. Ultimately, the price is the voice of the market itself. It is not always loud, it is not always clear, but it is always honest. To study it is to listen directly to the will of buyers and sellers, stripped of all pretense. Everything else, news, forecasts, gossip, is commentary. The price is the fact. Learn to read its pulse, and you learn to feel the market's life coursing beneath the surface. Ignore it, and you may as well be trading blind deaf to the only signal that truly matters. Price is the surface of the market, but volume is its depth. To watch the tape without volume is to hear only half the conversation, like listening to a man's words without noticing the tone of his voice. A price may rise, but without the backing of heavy volume, it is a frail rise. A shadow without substance. A price may fall, but unless the selling is accompanied by weight, by urgency, it may not be the beginning of a true decline. Volume is the crowd's emotion revealed in numbers. It shows whether men are whispering or shouting, whether they are probing cautiously or committing themselves with both hands. Without volume, price is incomplete. With it, the code of the market begins to take shape. Every trade that passes through the tape tells two things: the level at which buyers and sellers agreed, and how many shares changed hands. The first is price. The second is volume. The casual observer looks only at the level, but the skilled operator studies both. If a stock rises a point on a few hundred shares, it may mean little. If it rises the same point on tens of thousands of shares, it means something entirely different. One is a ripple, the other is a wave. The difference is conviction, and conviction is everything. Price alone may deceive, but price with volume tells the truth. When markets move on small volume, it is like soldiers marching without drums. The movement is quiet, hesitant without the force to carry it forward. Such moves are fragile. They may continue for a time, but they lack endurance. On the other hand, when volume swells, when thousands upon thousands of shares are changing hands at each new level, it is the sound of drums echoing through the field. The movement has power behind it, and power sustains trends. It is not merely the rise or fall of price that matters, but whether men are committing themselves in size. The crowd's real intentions are revealed not by what they say, not even by the direction alone, but by how much they are willing to wager. Volume measures that wager with perfect clarity. Volume also serves as confirmation. Suppose a stock breaks to new highs. The crowd cheers, the newspapers call it bullish, the novices rush in, but the careful operator asks, was the move on volume? If the breakout came without a surge in trading, it is suspect. It may be only a manufactured move, a painting of the tape to lure the gullible. But if the breakout came with great volume, if the ticker rattled with thousands of shares pouring through, then the move is genuine. It shows that demand has overwhelmed supply, that strong hands are pressing forward with conviction. Without that confirmation, every move is suspect. With it, the story is validated. The same holds true in declines. A stock may fall a few points, and the timid rush to sell, fearing a collapse. But if the decline occurs on light volume, it may be nothing more than a temporary correction. A few weak holders shaken out. There is no real conviction behind the selling. But if the decline is accompanied by immense volume, if the ticker races with shares being dumped in panic, then it is real. It shows fear has seized the crowd, that supply is overwhelming demand. In this way, volume separates the trivial from the significant. It tells you when to believe what you see and when to doubt it. There is a rhythm to volume, just as there is a rhythm to price. During advances, volume should expand as prices rise, showing that buyers are eager and plentiful. On pullbacks, volume should contract, showing that sellers are few and uncommitted. This rhythm is healthy. It sustains the trend. When the rhythm changes, when advances come on weak volume and declines come on heavy volume, it is a warning. It is the market's way of telling you that the story is shifting, that what was once strength may now be weakness. The tape whispers these warnings long before the headlines announce them, but only to those who know how to listen. Volume also reveals the hand of the great operators. They cannot move in and out of markets without leaving footprints, and those footprints are in the volume. When accumulation is taking place, you will see volume swell on advances and shrink on declines, again and again. as strong hands quietly gather stock. When distribution is underway, you will see volume swell on declines and shrink on rallies as the strong unload to the weak. These patterns repeat endlessly because human nature never changes. Greed and fear drive the crowd, and volume is the measure of that drive. It shows when men are rushing in with abandon and when they are fleeing in terror. One of the most telling signs in the market is the climax of volume. At major tops, volume often explodes to extraordinary levels as everyone rushes to buy in the final frenzy. Prices may still be rising, but the pulse is irregular, frantic, unsustainable. The trained eye sees it for what it is, the last gasp of strength before exhaustion. At major bottoms, volume too explodes, but this time it is the capitulation of sellers, dumping their holdings at any price. The ticker runs wild. The market shakes with panic, and yet it is precisely in that moment of despair that the seeds of a new advance are planted. These climactic volumes mark the turning points, and they are among the clearest signals the market ever gives. It is tempting to rely on formulas, to measure volume with rigid ratios, to treat it as a mechanical gauge. But volume, like price, must be read in context. 1,000 shares may be great activity in one stock and nothing in another. What matters is not the absolute number, but the relative force, the way volume compares to its own history, the way it behaves at critical points. The operator must develop a feel for this, a sense of proportion, built through long observation. It cannot be reduced to a single rule, because the market is alive and volume is its breath. You must listen to how it inhales and exhales, when it grows short of breath, when it gasps, when it breathes easily. That is the true art of reading. Volume also teaches patience. Many traders act on the first movement of price, but the wise wait for volume to confirm. They know that without the crowd's participation, no trend can last. They do not buy simply because a stock has ticked higher. They wait to see if the buying is genuine, if it carries weight. They do not sell merely because a stock has dipped. They wait to see if fear has truly gripped the market. Volume is the filter that separates noise from signal, appearance from reality. It keeps the operator from being deceived by the market's feints and false starts. To study volume is to study human behavior at scale. It is to see greed measured in contracts, fear measured in shares, hope measured in the pace of the ticker. Price shows you the outcome, but volume shows you the passion behind it. Together, they form the market's hidden code, each incomplete without the other. Price is the body, volume is the blood. When both move in harmony, the trend is alive and strong. When they move in discord, the trend is sickly and ready to reverse. This is the story that volume tells. The confirmation that every serious operator must demand before committing himself. Every movement of the market is nothing more than the reflection of men's emotions recorded in price and volume. Greed, fear, hope, despair. These are not new forces. They are as old as the human race, and because they do not change, the patterns they create in the market do not change. What happened 50 years ago happens again today, and it will happen again 50 years from now. The ticker tape is not simply a record of transactions. It is the diary of human behavior under the stress of money, and men behave under that stress the same way in every generation. When prices rise, men grow greedy. They see others making profits and they cannot bear to be left out. They convince themselves that the rise will never end, that this time is different, that fortunes are waiting for anyone bold enough to buy. They chase prices higher. They ignore warnings. They dismiss risk. The market rewards them for a while, and that reward only feeds the frenzy. This is how bubbles are born, and they have been born in every century, in every market. The details may differ. The tulip bulbs of Holland, the railroads of England, the internet stocks of America. But the pattern is the same. Greed blinds men to reason, and the tape records their folly in the same way each time when prices fall. Men grow fearful. They tell themselves they will hold on, that the decline is temporary, that it cannot go much lower. But as the losses mount, fear takes hold, and eventually panic erupts. They rush to sell at any price, desperate to escape, certain that ruin is inevitable. This too has repeated across history, in every great crash and every minor panic. The market does not invent new emotions. It simply provides the stage upon which the same old drama is played. Those who study the tape long enough recognize the scenes as they unfold. They have seen the play before. And though the actors are new, the script is unchanged. One of the great illusions of each generation is the belief that they are wiser than the last. Men say, "We have learned from history. We will not repeat the mistakes of our fathers." But when greed stirs or fear tightens its grip, the lessons of the past are forgotten, and human nature asserts itself once again. The patterns return, as inevitable as the tide. The wise operator does not laugh at this folly. He accepts it as fact. He knows that his advantage lies not in being smarter, but in being more disciplined, in remembering what others forget. While the crowd convinces itself that a new era has begun, he recognizes the old pattern reappearing beneath the surface. While the public believes a crash is the end of the world, he remembers that all panics eventually burn themselves out and give way to recovery. The market provides endless examples of these repetitions. Consider the distribution phase at the end of a great bull market. Prices continue to rise, sometimes making new highs, and the public grows ever more confident. They buy eagerly, certain of endless profits. But behind the scenes, the strong hands are selling. They distribute their holdings quietly, feeding stock to the eager crowd. The tape shows the signs. Volume surges on rallies, but prices fail to advance meaningfully. Declines come heavier than expected. The crowd does not see it, for they are blinded by hope. But the student of the tape recognizes the pattern, for it has happened countless times before. He knows the end is near, though the crowd will only believe it when the collapse comes. The same is true at bottoms. After a long decline, after fear has wrung every last ounce of hope from the market, the selling climaxes. Prices plunge on enormous volume, and it seems as though no buyer is left in the world. The newspapers cry ruin, the public swears never to return. Men throw away stocks at any price just to escape the pain. Yet beneath this despair, strong hands are quietly buying. They accumulate what the crowd discards, just as they always have. The tape shows it. The decline loses momentum even though the news grows worse. The volume surges, but prices refuse to drop further. Certain stocks begin to edge upward in defiance of the general gloom. The public cannot see it, for they are blinded by fear. But the pattern is ancient, and the student of the tape knows it well. From panic comes recovery, and from despair comes opportunity. Patterns repeat not only in great booms and busts, but in the smaller movements of every day. A stock in strong hands will advance in stair-step fashion. Sharp rallies followed by orderly consolidations, each correction shaking out the weak before the next move higher. A stock under distribution will decline in the same way. Sudden drops followed by feeble rallies, each bounce luring in new buyers before the next leg down. These patterns are not accidents. They are the inevitable result of how men react to gains and losses, to hope and fear. The market is nothing more than the sum of these reactions. And because the reactions are timeless, the patterns are timeless, the novice looks at the tape and sees chaos. The experienced operator looks and sees repetition. He recognizes the same formations he has seen 100 times before. He sees the crowd behaving as it always has, first too eager, then too fearful, always too late. This recognition is what allows him to act when others are frozen. He is not guessing the future. He is recalling the past. The tape is his history book, and every page reminds him that nothing is truly new under the sun. What men call unprecedented is only unfamiliar to them, not to the market itself. It is tempting for men to believe they can outgrow human nature, that new technology, new regulations, or new theories will change the game. They tell themselves that this time will be different, that the old patterns no longer apply. But the market humbles them in the end. No machine can erase fear. No law can banish greed. No theory can rewrite the instincts of self-preservation and ambition. As long as men are human, the patterns will repeat, and the tape will record their repetition faithfully. The wise operator does not waste time hoping for something new. He prepares himself to recognize the old, again and again to read the tape. Then is to study humanity itself. Each surge of volume is a wave of emotion. Each price change a decision made in the heat of hope or the cold of fear. The market is a mirror, reflecting not what men say about themselves, but what they truly are when money is at stake. And because men do not change, the reflection does not change. The same faces appear in every generation. The eager speculator chasing riches, the cautious man holding too long, the desperate seller throwing away his fortune at the bottom. The tape records their actions without judgment, but the patterns it reveals are there for any disciplined student. To see the repetition of these patterns is not a flaw of the market. It is its essence. Without it, speculation would be chaos. With it, speculation becomes an art for those who learn to recognize the code. The patterns are the handwriting of human nature, inscribed across the tape in every rally and every decline. To ignore them is to be condemned to repeat the mistakes of the crowd. To study them is to step outside the cycle, to see the play from the balcony, while others stumble blindly. On the stage, there are many who think the tape is no more than a history of what has already happened. They call it a record, a backward-looking account, something that tells only where prices have been. But that is because they do not know how to look at it. To the untrained eye, the tape is just numbers and letters, the dull march of trades already done. To the operator who has trained himself, who has lived in front of it for years, the tape is alive. It is not just the past written in ink. It is the present in motion, and within that motion lies the shadow of the future. The market does not reveal what will happen in plain language, but it hints, it repeats, it leaks clues in every tick, and the reader of the tape is the one who catches those clues before the crowd understands what they mean when you watch the tape. You begin to see how today connects with yesterday, and how both set the stage for tomorrow. It is not fortune telling, it is recognition. A stock that holds firm under selling pressure today is showing you that there are strong hands beneath it, absorbing supply, preparing for a move. A stock that rallies but cannot sustain its gains is showing you that distribution is underway, that the strength is hollow, that the decline is near. These are not guesses. They are signals. They are the footprints of money as it shifts from weak hands to strong, from strong to weak, from accumulation to distribution. If you can read those footprints, you do not need a crystal ball. The tape itself is enough. The market is always ahead of the news. Long before the headlines announce trouble or opportunity, the tape has whispered it to those who could hear. When insiders know something is coming, when those closest to the facts begin to act, their actions appear first in price and volume. They cannot move silently. Their footprints are too heavy. The tape records those footprints faithfully. A sudden swell of buying before good news, a steady stream of selling before bad news. These are the clues. The crowd only understands when the story breaks, but the reader of the tape has already seen the story written in the numbers. He is positioned before the others wake to the reality, and that is why reading the tape is reading the future. It is not that the tape gives certainty. Nothing in the market is certain. What it gives is probability, the edge that comes from recognizing when the odds are shifting. The crowd sees a stock drifting aimlessly. The tape reader sees quiet accumulation and knows the odds favor a move upward. The crowd sees a rally as strength. The tape reader sees the weak volume and knows the odds favor a reversal. This difference is everything. One man trades on hope, the other on evidence. One reacts late, the other acts early. The future is never guaranteed, but the tape tells you when it is leaning one way or the other. And if you can learn to trust that, you will always be ahead of the crowd. Think of how the tape shows exhaustion. After a long advance, when the crowd is loudest and confidence is greatest, the price action begins to falter. Volume grows wild, swings become erratic, each rally weaker than the last. The public sees only the new highs. The tape reader sees the heartbeat quickening, irregular, unsustainable. He knows the top is near because he has seen this exhaustion before. Likewise, at the bottom, when fear is thickest, when men throw away their holdings in despair, the tape shows something different. It shows that despite the panic, prices refuse to drop further. It shows that volume, though heavy, is being absorbed. The tape reader sees the footprints of accumulation, the strong taking from the weak, and he knows the bottom is near. These moments, invisible to the crowd, are written plainly on the tape for those who know how to read it. Reading the tape is also about timing. The market may be right in the long run, but the tape shows you the moment when the balance tips. It is one thing to know that a stock is strong. It is another to know the exact moment it breaks through resistance and begins its true move. The tape shows you that moment, the sudden burst of volume, the clean advance past the old level, the refusal to give back gains. That is the signal. Without the tape, you are guessing when to enter, when to exit. With the tape, you are responding to the market itself, not to your hopes or fears. The market leads, the tape records. And you follow the footprints. There is also deception in the market. And the tape is where it is revealed. Operators may try to manipulate prices to paint the tape, to trick the public into believing strength or weakness that does not exist. But deception cannot be sustained. The tape betrays it in time. A rally without volume, a decline that fails to attract real selling. A series of false moves that cannot follow through. These are the tells. The crowd may be fooled, but the tape reader is not, because he watches for consistency, for confirmation. When the story of price and volume does not align, he knows the truth is different from the surface. He waits, he watches, and when the mask slips, he is ready to act. In this way, the tape not only shows the future, it protects you from being misled in the present. To sit before the tape is to witness the eternal cycle of the market playing out in real time. Accumulation, advance, distribution, decline, again and again. The same stages, the same rhythm. Each stage has its signals, its fingerprints, and the tape shows them if you have the discipline to look. The future is simply the continuation of these cycles. The crowd is forever surprised when one stage ends and another begins. But the tape reader expects it because he has seen the signs before. He knows that when accumulation is complete, an advance must follow. He knows that when distribution is done, a decline is inevitable. The future is written in the present, and the tape is the script. But reading the tape requires more than eyes. It requires patience, discipline, and memory. You cannot glance at it now and then and expect to see the future. You must live with it, study it day after day, until the patterns are etched into your mind. You must remember how the tape looked in past markets, how it behaved before great moves, how it whispered the truth long before the crowd knew it. That memory is what allows you to recognize the signals today. Without it, the tape is just numbers. With it, the tape is the future unfolding. Before your eyes, the market has no obligation to explain itself. It does not care whether you understand or not, but it always leaves its clues, and it always records them in the tape. The crowd will always be late, always reacting after the fact, always living in the present while the opportunity is already gone. The tape reader is different. He listens, he interprets, he anticipates. He sees tomorrow in today's action because he knows the language. He knows the code. To read the tape is to step out of the blindness of the crowd and into the clarity of foresight. It is not magic. It is not guessing. It is the recognition that the future leaves traces in the present, and the tape is where those traces are found.